What's going on, guys, and welcome back. I wanted to go ahead and take the time as requested to break down the $7,000 trade we took here on Starbucks right at the gate. And I know for a fact that I will have somebody somewhere trolling either in the comments on Twitter. That's just, unfortunately, that's just the world we live in, the world of trolls. Can't fake that. And long story short, we can pull this and we can pull this up here as well. And again, this is here. Again, you don't see anything paper trading. You see main grid. You can minimize this again. Everything's green. But for those of you guys who want to learn what I did and why it worked, let's go ahead and get into it. Now, what is my edge? You guys have been following me. If you're on my team, you already know. If I'm trading individual names, it's going to be different than how I trade the indices. When I trade individual names, there's different rules and different requirements. One is the most important, relative volume. Pre-market, we were shooting 8.0 relative volume. We gauge this by a software called Trade Ideas. Trade Ideas, in my opinion, is probably the best scanner you can get. 8.0 relative volume pre-market. So right off the rip, we want to see how we can look at the daily chart and put together a plan on what's more likely to happen. So with that being said, we will go from top-down approach. And the first thing that stood out to me is that we're green on the month in an environment where the majority of stocks are getting pretty much smacked around. So we want to keep this on watch because why is this green on the month? Take this down to the weekly. And again, you want to just go from a top-down approach. On the weekly, we did move up and we're halfway through this weekly candle. And on the daily chart, we're at the bottom of a wedge. We can trigger this 2-2 up, trying to trigger and trying to attack that 88 area. Okay. So now we have a plan. We want to go long above that 84.63 and we want to target that 88. That's a $4 move. And I know it's only $4, but on an asset like this, you get some weeklies. That is a huge play. Now, how did that look? Okay. So breaking it down, this is the 5-minute chart. Take that 2 candle, go back down to the daily. You see this candle here, bring that back down to the 5-minute before any of this even happened. That's my trigger. That's a wedge. That's a pattern. We can go ahead and play that on the gap above that or any break above that because you're breaking out of a pattern, right? Long story short. So everybody's going to say, X, I put this level there and, it gapped above. What do I do when it gap above? Because the majority of people can trade. That level's there and price breaches that level. It's easy to trade that, but when it gaps up, it causes a lot of confusion. And this is why I've broken down in the program on 3 different levels of gaps and how you're supposed to trade it. Long story short, when we level 1 gap, which is a small gap, we are clear to play and trade that open. All right. What we're expecting on level 1 gap is a small dip in the run on like a 1-minute time frame, and it did just that. And we put the stop loss at the bottom of that particular entry candle. Now, I want to just point something out. This is the trigger. We gapped above. Ignore the fact that we gapped. There's my target. Let's just say price broke out on this candle. My stop will be literally right here. Okay. What's that risk looking like? Nothing. Okay. So when I got into this trade and we gapped above, we dipped a little bit and went up, and I put my stop right there. Theoretically, my entry, that's my risk. What's my reward? This is like 10-1 right here with high confidence because we have an edge, which is extreme relative volume. Okay. So long story short, trigger the target, easy trade. Here's what it looked like on the trade review. Here we are. This is the 1-minute chart. We're going to go candle to candle, candle to candle. Boom. There's that dip I was talking to you about. But once we dipped, as soon as we turn green, I hit the trade, put the stop loss there. Boom. In the trade. Bam, 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 bam. It was just straight up easy money. We wanted to go all the way to our target, which was up in here. Okay. But whatever I always explain to people, sometimes when you get in these moves and they're parabolic and you have weeklies and you're already up 110%, take that profit because they can easily go sideways or pull right back on you and give back some of that profit before it goes higher. You can always get back in. Never sit here and pay to watch. You can always watch for free and then re-enter. So at this point, I'm looking to take profit, even though we're not directly at our target yet. And long story short, we went a little bit higher. Then this candle right here kind of threw me off on the 1. And then once we broke structure right here, I called cut. Long story short, overtrade for over 112%. Great day on the team. Market's still open. We have the event with the Federal Reserve, the beige book. To this day, I want to understand what that is, but I'm waiting for a reaction. So far in the current market, we're not really seeing anything right now. So I'm going to go ahead and stay cash pretty much for the rest of the day. But that's it for me, guys. Thank you guys for your support. Thank you guys for tuning in. Be sure to like, subscribe, and follow for more information. And as always, feel free to come trade with me live streaming every day. meeting every day with my team to grow everybody and get everybody to a certain level. Besides that, I'm out of here, guys. I want to thank all of you guys for your support. And if any of you guys have any questions, feel free to DM me. Be easy, everybody.